Forex or FX stands for foreign exchange, which is the conversion of one currency to another currency. A typical example is going to a bureau de change to exchange your local currency for dollars, euro, or pounds, which we usually do when traveling out of the country. This is all done physically through a hand-to-hand exchange of the currencies. Online forex trading, however, is the process of speculating on currency prices to potentially make a profit or loss. In online forex trading, currencies are traded in pairs just like the traditional bureau de change. When forex trading is done online, the trader is speculating on whether one currency price will rise or fall against the other without actually owning the currencies. Through the help of contract for difference, CFD, brokers, online traders are able to analyze the financial market and predict the price movement of various financial instruments without owning them. When trading on the CFD platform, currencies are traded in pairs. For example, if you want to trade Euro-USD, and you think Euro will increase in value and USD will decrease in value, you will want to buy Euro-USD. Then if you think Euro will decrease in value and USD will increase in value, you will want to sell Euro-USD. Wrong predictions can lead to some loss of your trading capital. The currency values fluctuate based on various trade flows, and economic, political, and environmental factors, which affect the supply and demand of Forex. This creates daily volatility that offers Forex traders new trading opportunities. Online Forex trading has no physical location or central exchange as it is a decentralized global market, meaning you can buy and sell currencies from your phone, laptop, tablet, or PC. The Forex market trades 24 hours a day, 5 days a week. No other market in the world trades as much volume as Forex, which is why there are many trading opportunities for traders. Stay tuned for more videos.